Good.
Yeah, I
All
got
right,
it.
let's get it started here. Thank you everyone for joining us. We got another really good meetup. Jesse Vasquez is here joining us. My name is Alex Sabio. I live here in Southern California. I invest in luxury short-term rentals, and I'm here with Savannah.
Yeah. Hey, everyone. I'm Savannah. I invest in, I have some single family homes and also I invest in multifamily syndication. So if you're looking to passively invest in real estate, hit me up. I'm always working. So I'm really stoked to listen to Jesse today, though, because this is a topic that I'm super interested in. Obviously, this group has piqued my short-term interest for sure. So wanting to get into this space, and I'm looking towards this midterm rental space particularly. So yeah, super excited to have you here, Jesse. I don't even know where you're from, so we'll maybe kind of let you introduce yourself and kind of share what you're working on.
Yeah, definitely. Did you make me presenter so I can share my screen here real quick? So I have a little presentation. I don't know if that's okay with you guys. If I
That's
can
perfect. Yeah, yeah.
Perfect. People love that. So everyone, this will be recorded. Alex and I host this group every Monday night at 6 p.m. through Zoom. We got a lot of healthcare professionals investing in real estate in this group, but it is open to everyone. We got a bunch of cool topics on here. So I do record this, upload it onto the YouTube channel. And then because Alex does it live, it already goes onto the Facebook channel. So drop your questions in the chat, and then Alex and I will kind of tag team getting those over to Jesse, or you can put the hand raise. That's usually, Jesse, do you have time at the end for questions? Did you carve out a little time?
Yeah, can you guys hear me okay? I just want to make sure I got a microphone up here.
Yep, perfect.
Hey,
Okay, cool.
and one other thing, guys, to help grow our group, if you guys could go on Facebook and share the video, like if you guys are on my profile, you'll see me live streaming. You could share it onto your profile, or when Savannah posts the YouTube video, maybe just share that video so that way we could get a lot of exposure, and that way Jesse could get his message out there too.
Yeah.
Yeah, sharing is caring.
All right, without further ado, Jesse, take it away, man.
Cool. All right, guys. So if you look at my dorky picture right here, it's because I took a screenshot from a YouTube video that I had. I don't take pictures, so I'm going to kind of dive into what I do and how long I've been investing in this market, and I'm going to talk a little bit more into the whole aspects of midterm rentals and short-term rentals and kind of how I cohesively mix them together. So my name is Jesse Vasquez. For those of you who don't know, I am out of the Central Valley, which is Modesto, which I'm about an hour from San Francisco and an hour from Sacramento and an hour from basically kind of the mountains. So I'm kind of right in the smack in the middle between all the cool areas, which a lot of investors, by the way, are coming to the Central Valley because it's a hell of a lot cheaper to buy a property than in LA, Alex, or in the Central Valley. And at the end of this video, I'm going to show you guys kind of what my market is doing and how I'm doing specifically in that market. So it'll give you guys investing kind of an idea what the Central Valley can actually offer you guys. So I actually worked in healthcare for the last 17 years. And as of July last year, I jammed out. I was working I wasn't in the nursing side like most of you guys are. I was on the business development side of, I actually worked for a home health agency and a hospice agency. And my job was to get patients that were discharging from the hospital to get home health services or hospice services. And I would be on the floor of these hospitals connecting with the discharge planners to connect with them so that I can get a referral to go home. So basically a glorified business development is just basically sales. So what I learned early on back in 2015, you guys, is, and this is just in my market, by the way, pre-pandemic, I started noticing I would be on a floor of a hospital, like on a med tele floor, and I would be talking to the discharge planners about a patient that's going home that needed like oxygen or any type of equipment. That was my job, is to get all the stuff, all the equipment ready for a patient to discharge, whether it was enteral feeding or oxygen or nursing, PT, OT. I was to gather all that information. So I would talk to a lot of the case managers, the nurses on floor, to make sure we had enteral feeding, whatever was needed. And I started recognizing a pattern. And this is back in 2015, again, in my market, in the rural market. Clinicians were coming to my market, traveling, because we don't have enough staff in this market. They were traveling here, and I would ask them, like, hey, they had a Midwestern accent. So I'd ask, like, hey, what are you doing? What are you doing here? And they would just say, like, hey, I'm traveling. I'm a travel medical professional. I'm here for 90 days at a time. And I'd be like, oh, that's cool. Like, where are you staying? And guess what? Literally 9 out of 10 of them, when I asked them, well, I asked them where they were staying, what they would say to me. Travel Lodge, Motel freaking 6, a crappy Holiday Inn around the corner. So a lot of these travel medical professionals were staying, and I'd ask like, hey, like, how much are you guys paying a month there? And a lot of these hotels in a rural market were $100 a night. So they were paying over $3,000 a month just to stay in this little rinky dink hotel in my market. And at that time, prices in my market were about $300,000 to buy a 3-bedroom, 2-bath. So the mortgage would only be about $1,500. So I started kind of thinking about it. I'm like, holy crap, I could literally buy a property or two and house travel medical professionals. Like, I'm already on the floors with them. I see them. I can find out what they're doing, who they're working with, what agencies they're working with. So that's where that light bulb aha moment went off, where I'm like, holy crap, I have a huge potential and possibility to bring these travel medical professionals into my own properties that I own and, you know, build a business out of that. So that's when I started thinking about the ideas and the possibilities behind travel medical professionals being in a rural market. And I started actually really thinking about, and this is what I need you guys all to think about right now if you're investing in these markets, and I'll have a little bit more slides where I talk about this, is that in my market alone, there's only one college where RNs graduate every year. There's about 30 graduates per year, and 70% of those, I talked to the actual, the teachers at the school, Stanislaus State University, had told me that 70% of their students don't even stay locally in my market. We already had a travel nursing or a nursing shortage already. So we're only having, you know, 6 or 7 of these graduates every year actually stay in my market. And it's also in the armpit of California. So a whole lot of people don't want to necessarily be here, and travelers are actually making more money than they're making in the Bay Area here in my market. And this is happening all over the US, you guys. I'm going to dive into this a little bit more, but I'm going to kind of talk about a little bit of short-term rental stuff. And I'm going to talk about how I mix the two together, hybrid model, which is short-term rentals and midterm rentals. And I kind of cohesively mix them together. So I'm going to kind of dive in that a little bit. So that's kind of a backstory on what I do, how I found the need, how I recognized it, being on the floor of these the hospitals. And you guys all have access. There's a lot of healthcare clinicians in here. You guys all have access to these agencies, or excuse me, these nurses that are coming in on the floors. You can just ask them like, hey, what agency are you working with? Who's your recruiter? There's all kinds of stuff you guys can gather from this information to build your business in your own backyard, if your market is going to allow that. So key points that I want to talk about here. Diversification is super important. You guys all know that. If you're investing in the Smokies, which I know, Alex, you are, those markets are becoming very saturated with a lot of people heading into those markets. So not that they're not going to do well in, 2 to 5 years from now, but the barrier to enter there is really high. You're paying, $600,000-700,000 for a property when you could technically buy a place in Fresno for half of that price and be able to make, a 30% cash on cash return rate. Plus, longer stays means lesser headache, especially if you're managing a property yourself. And this is something that's big for me. Relationships are the new currency. If you guys don't believe this, I don't know what to say. And what I mean by that is we're all in this room together. We're all communicating. might have a deal. Alex might have a deal. Savannah might have a deal. Phil might have a deal. We're all connected in this more than anything. And real estate is one of those networks that if you know somebody that knows somebody that knows somebody, you're automatically, boom, connected. And I can help close a deal way quicker, just connected. So for me, it's not about the dollar that I make today. It's about connecting with an actual person that has relationships that I could build off of, that I can help them. It's mutual, which is super important, especially if you guys are going to be dealing with recruiters, with traveling nursing agencies. That's where that's the bread and butter of everything that I do. And I host a class. I actually teach a class exactly how to do this. And it's going to be deeper than what we're doing in this conversation, but it teaches you how to connect with recruiters, with agencies, and to really build a sustainable model, which is the next thing here. So California, I might be jumping a little ahead of my slides right now, but California, Florida, Texas, Illinois, North Carolina are all states that do not have enough clinicians to meet the demand of patients. The ratio is off. In the National Registry for nurses, states that in those states, we're not going to have enough clinicians pre-pandemic that will actually be pre-pandemic levels until 2030. So me starting a business today, I know that I have 8 years, a pretty decent long roadway to create a sustainable business in the next 8 years. And you guys all sitting here right now, know that 8 years is kind of a long time when you're looking at things in a business perspective. So really keep that in mind. I just talked about sustainability. Always be ready to pivot. People lost their businesses back in 2020, 2020 when pandemic hit because they were just stuck on the short-term rental model and didn't pivot, didn't think ahead of time. We saw restaurants, same issues. We always have to be able to adapt with what our opportunities are. And right now there's a huge opportunity for us, and it's sitting right in front of us. And we've been watching this all happen with, the United States showing how big of an issue that we're having with the, with clinicians. There's a huge need for clinicians. We all know this already. And
Jesse, what did you say the states were again?
California, Illinois, North Carolina, Florida, and Texas.
Awesome.
Those five states right now, if you just Google states with the lowest clinicians to patient ratio, those are all the 5 states. So if you're in one of those states, you're investing in those states, huge opportunity right now. So there's a new normal of travel. You guys know this. The travel industry has completely changed since COVID. It is not what it was 2 years ago. 100% not the same thing. It's evolving, it's changing, it's shifting. And that's for us investors to realize what's happening. We're keeping our ear to the floor and realizing where the opportunity is actually at. So that's where I really want you guys in this call to really start thinking about the opportunities that are around us, especially, again, going back to clinicians that are working on floors, that are connecting with these travelers that are coming in. You guys have like the opportunity more than anybody else. And I'm telling you this from personal experience. So our market's shifting and changing. The demand surge for small town markets. This is all AirDNA data, by the way. I'm gonna kind of break this down for you guys real quick. Demand surge for small town markets. And it didn't just surge for, people wanting to go to, Arnold, where Big Trees is at in California, and go vacation there for a couple of days while the pandemic was hitting. It's actually shifted completely. The rural markets, anything less than 100,000 people actually grew. And I'm going to have some numbers that are going to back that up here. Q1 of 2021, the US hit new booking records for the month leading up to April 2021, when demand night surge surpassed 2019 levels. So I want you guys to kind of realize this. 2021 of April, the demand was actually, we had more bookings than we did pre-pandemic. So that booking demand is like, it's there. And you guys that invest in the Smokies and all these places, you guys probably felt the benefits of that happening. I know that you guys all did, which is fantastic. So the milestone marked the end of the recovery at the new beginning phase for expansion in the US short-term rental industry. All you guys in here right now, we either heard about short-term rentals before, or something that was there that you never really thought about, but now all of a sudden it's becoming like that shiny new object, right? There's a lot of money to be made, and there's a way to really connect. But what I'm trying to talk to you guys, it's not just the old traditional way. We want to have a renter in there. We want to think progressively. We want to think in a different way. We want to think intellectually, and we want to invest in the same way. So we're going to talk about that. In the short-term rental, in the longer-term short-term rental industry, we'll continue to professionalize and expand its share in the total lodge spend. Huge point I want to make here. There's way more professionals getting involved in this market that have already been here that are getting way better than they've ever been. So if you're new and starting off, that's okay, but you have to make sure that you're adapting to what these professionals are doing. And if you're going to manage yourself, you need to do the exact same thing, if not better than they're doing. Because as this market becomes more saturated, guess what's going to happen? All those little guys that aren't performing well, they're going to fall off to the side, and all the people that are professionalizing are going to stick around in the next 5 to 6, 7 years. So really think about that. I'm sure that's why you guys are here. And we all know that the increased flexibility to live and work anywhere and will provide opportunities in this sector should help to get back to pre-pandemic trend growth. We see that now. We see that the sectors with like Facebook, Google, Oracle, all these large companies are actually giving stipends now to individuals to go work wherever the heck they want. They're not tied to San Jose anymore, or San Francisco, or Oakland, or Berkeley. They don't have that anymore, which is another trend that, we're going to talk about when we talk about midterm stays. It's not just healthcare clinicians. Please keep that in mind. Some other really important key factors here that I really want you guys to know. Demand changed 22.4% uptick, even with delayed demand recovery in large cities. So large cities were really hurt bad by the pandemic. So people in like San Francisco, New York, Chicago, all these big areas where there's a lot of people condensed in a small area, those were actually hit the hardest. They had and I'll show you in the next slides coming in, that they had the hardest time getting back to the levels they were before. And that's where you saw a lot of these urban markets. People were bouncing the heck out of there because they couldn't handle having that low, the low occupancy levels. So that demand is coming back. We're seeing an uptick, 22%. Supply listings. Supplies, surprisingly, and this is something that really surprised me, Overall listing numbers have seen little growth in 2021 at 2.5% due to the run up of single family home prices the last summer, in addition to weak supply trends. We all know that the US has a housing shortage. You guys all know that. You guys are probably looking in your backyards right now and realize that crap, it's hard to find a property. There's just not enough properties to deal with the demand. In the last decade, we have had fewer homes made than any other decade in the US history, going back to like 1920 or 1930. So we know that there's a huge shortage in general. So this number really surprised me because I thought there was a heck of a lot more people getting in to short-term rentals than there actually really is. And again, this is AirDNA data that piggybacks off of Airbnb. Occupancy rates, lower supply growth allowed for higher average occupancy levels in short-term rental operators. So 60.2% is the number of the occupancy levels through the entire US. You guys, 60% out of everywhere, any small podunk little town in the middle of Missouri, all those combined together, 60%. Like, that's freaking fantastic. If you look at the chart here, it's going to show you occupancy levels. I don't know if I can highlight this or not, but anyway, there's blue, everything blue on the highlight right there is 53% in 2019. And if you look at 2022, 2021, 60%, 2021, 59% is expected in 2022. So we're already seeing the uptick in occupancy, which is that pent up demand is like, hey, we need to get out and do stuff. So really pay attention to that. The average daily rates, we already know that we have inflation issues, you guys. That's why we want to invest in real estate, right? That's what we're here in this, we're talking about this. Our dollar's worth less and less. So we need to make sure that we're purposive in putting that money into something that's going to build revenue over time. And right now, what is great, our average daily rate has gone up 11.6%. That's awesome. So everybody here now, I'm pretty sure if you guys haven't raised your prices what they were last year, you better do it. Like, now's the time to get in there and actually start raising your prices. So really think about that. I want you guys to kind of see the data of actually what's happening right now on this end. So this is another huge milestone I want you guys to really think about. The fourth quarter of last year was another record quarter in 2021, was the best year the Airbnb ever had. We just had these earnings on the IPO, just came out like literally 3 or 4 days ago. Despite the global pandemic, we are amidst the biggest change in travel since advent commercial flying. Airbnb's adaptable model is relentless innovation, making it possible for us to grow in a new category of travel we've created. The shift happened with the market. Everything's changing. The way that people were lodging, the urban markets, everything is completely shifting. So now Airbnb is really that forefront of where people are going, how they're, I don't stay in hotels. I mean, I do like them sometimes, but I personally don't stay there. I'm sure a lot of you guys, you know, like to go to hotels sometimes. The only time I like to go to a hotel is because they have a cool bar in there and I can be around other people, which again, where people were avoiding that situation. Now we're kind of getting back to the post-pandemic life, which we still don't know what's going to happen, but we're seeing it in the numbers based off of what Airbnb is producing for us. So really keep that in mind, that Airbnb had its strongest year despite the pandemic in the end of 2021. So STR Airbnb highlights. So guests are discovering thousands of small towns and rural communities all over Airbnb. I can tell you guys that right now. Like, I have multiple properties in small markets: Modesto, California, Fresno, Arnold, Strawberry. These little tiny towns where people are actually heading, and they're doing that. They're heading there, and you're probably asking, like, why the heck are they going there? For first off, there's hospitals, travel medical professionals. The infrastructure bill just passed in October, and the infrastructure bill, they're redoing new roadways. There's new construction happening with, you know, like we have a David Buster's that's coming into town. All these agencies are building new things, which we don't have enough people here. We all know that there's a shortage with, you know, just general labor in general. So people are coming from other states to come work places, and guess what? They got to sleep and stay places too. So you got to think about it, just not only on the nursing sector, but on the potential of all the other, you know, abilities that we have to look for these specific markets. Guests are planning more travel despite variants and surges. We're seeing that now, right? It's kind of, we're starting to see it, especially in California, we're seeing the downtick, but people are planning their vacations. They're setting them up. And if you guys have a calendar on Airbnb now, go look at June, July, August, September, October, and raise your hand right now if you realize that you're getting bookings for that time now, right now. And if you ever got those before, I can tell you that I'm seeing a heck of a lot more of those than I've ever seen any other previous year. Guests aren't just traveling on Airbnb; they're They're staying 28 days more or longer. Okay, so this is one of the biggest things I really want to hit home. I want you guys to hit home. I want to hit home with you guys. So Airbnb, the gross nights booked, 22% of the revenue that they had from Q4 was based on 28 days or longer. That's the midterm rental market. We're getting right into that. And that's up 16% from the Q4 pre-pandemic. So we're seeing that shift happen with the travel industry, with the way business travel is working, with the way medical people are saying, the digital nomads, they're doing things that are different too. They're staying in places longer. I have a place in Berkeley. I got guys that are working, you know, at Google. They're staying there for a month and they're jamming out to Austin, Texas. So those are things to think about as we go. You know, we kind of move around. We kind of move around too. So just one more thing. In Q4, Airbnb made 11.3 billion, and that 32% growth compared to Q4 of 2019. Like that's got to sink into you guys. That has to make sense on some way. So I really want you guys to think about that. 11.3 billion in Q4, which is better than the pre-pandemic 2019 levels. So really think about that. So this is another thing that we just talked about it a second ago. 2021, you see right there on the very top line, small cities and markets, 62% growth in these markets. 62%. I really want you guys to realize that, like, there was 62% growth in that. So most of the most popular destinations in the short-term rentals reached peak season months earlier than normal, which is great. And peak extended further than it typically does into fall. And this is back on 2021 numbers. Remote work has undoubtedly given workers added flexibility, which we talked about, and has helped spread the peak of demand over the months. We talked about travel people going in, staying places longer, 28 days or longer being more. But these numbers right here, I really want you guys to look at. Large cities on the very bottom down here on the graph, large urban markets were hit super hard. Remember, I was talking about the incline at the beginning, the 22% incline. They were hit negative 46% at the beginning of the pandemic. But the key notes in all this, the rural cities grew by 62%. Mountain destinations, you guys are investing in the Smokies. I know a lot of you guys are in the Smokies here. All those went up by 44%. Coastal areas always did well. They went up by 42%. The entire US as a whole went up by 24%. Mid-sized markets also went up by 24%. So really important metrics to look at when you're, you know, investing in this market. Flex work is the next big flex. We all know this. We just talked about it. The US short-term rental industry benefited from growth of work flexibility. 28 days or longer. This is happening right now as we speak all over the place. AirDNA shows data that these long-term stays make up for more than 50% of bookings and has a percentage of remained steady since the beginning of the pandemic. So it's 15% of the bookings, it's remained steady the entire time so far. So that's super important. Meanwhile, 75% customer service survey Airbnb commissioned across five countries found that nearly 2/3, 63% of all, what is that? I can't, my computer's getting out of here. Respondents say that they have come to expect more flexibility from their employers. And that's something I want you guys to think about. 63% change in the way that employees are looking at flexibility. This leads me to another thing, and I talk about this often for those of you who don't follow me. We're starting to see these huge hedge funds getting into the short-term rental market. And if you pay attention to anything in the history of the stock market or the US exchange or anything, when you start seeing things like this happen, this gives you an inclination that there's something really magical happening, and you really have to pay attention to it. You got to keep your ear to the ground as an investor. That's what I meant super early on. We're starting to see these big giant companies getting involved in this type of stuff. So Realpha bought $1.5 billion in single family homes last year. There's investors that are chasing the short-term rental market. They're realizing that there's opportunity there. They're seeing that there's money to be made. So that presents a huge opportunity in itself for everybody that's investing in the short-term rental space. I just posted this on Instagram the other day. That vacation home listed on Airbnb might be owned by Wall Street. And guess what? It probably freaking is. And if it's not, it maybe potentially will be. And if you don't invest in these markets, there could be eventually a time that a hedge fund can come to you if you own 5, 6, 10, 12, 15 properties in a certain market, even if it's rural. And I'm just giving you hypothetical numbers here. You say you paid $1 million for them all. They can come to you and say, hey, Alex, I'll buy your portfolio off you for 2.5 million. you're cash flowing 25%. Cool. We know this market's going to be great. I'm going to hang out with you. I'm going to buy this. So I want you guys to start thinking about that opportunity. There's another thing that I want you guys to think about. So right across the street from Walt Disney World in Disney World in Florida, the Dart family, Ken Dart, you guys, I don't even know if you're familiar with, they made this styrofoam cup, like literally the styrofoam cup that we drink out of, right? Which is bad for our environment, by the way. Those styrofoam, they're actually getting involved in the short-term rental industry. They just bought $1 billion worth of land across the street from Walt Disney World, specifically to get into the short-term rental market. So people that are making freaking styrofoam cups are getting in the short-term rental space. I need you guys to realize that it's becoming way more saturated, which is why we need to get better at what we're doing. And we need to think about numbers in a different way. You're asking yourself, why the hell is there why is the Boston Red Sox on the screen right now? And why is there a baseball background? First off, I love baseball. And second off, I still feel myself personally that we're still really early on in the short-term rental game and the midterm rental. In the midterm rental game, we're only in the second or third inning when it comes to short-term rentals. Airbnb was formed in 2007, really started growing in 2012. And if you look at it as a whole, really, as of the last couple of years, the last 5 years, 4 years, Airbnb has really become more of a household name, but that still gives us opportunity now. We know it's still very early in the game. It's still early to get in here. So if we look at it in baseball terms, we're only in the second or third inning. We talk about midterm rentals, we're just in the first inning when it comes to that. So I really want you guys to think about that perspective, which is why I put this slide on here. For those of you thinking like, why the hell is it's not even baseball season yet? Okay, so I'm going to jump into this because we got a lot of travel medical professionals in here. The effects of the nursing shortage have been more evident in 2021. Pandemic-related demand for travel nursing has skyrocketed as the UL has some struggle. So we know that and you guys working on the floor are probably burnt the F out on a lot of, especially in the emergency department floor. It's just been a mess. A lot of long timers that have been around for a long time bounced out earlier, their retirement. They're just like, I'm done. I can't deal with this anymore. I'm out of here. So the US really during the pandemic showed how bad our healthcare system is in a lot of ways, that we don't have enough clinicians to meet a pandemic and just to meet standards in a lot of ways when the hospital is pushed to its brink. So, you know, and we're actually, I'm not even going to dive too much into this, but Congress is trying to regulate travel nursing. They're trying to cap the amount that a lot of these these people are making. It's actually not really on the nurses themselves. It's more on the agencies, because they're basically price gouging, taking a lot of money from the hospitals. They're charging them just like our healthcare system does for toothpaste. You know, they're paying $30 for just a little tiny tube. That's exactly what the travel agencies are doing. That's why they're trying to regulate a lot of stuff. But anyway, I'll dive into that in a second. So the increased demand, this is something I really want. So the travel nursing industry, you guys, is a $9 billion industry. This is literally a $9 billion industry. I don't even know if you can even think about that, like fathom that. It's a $9 billion industry. And it's continuing to grow. And it's grown since 2020 to 2021 by 35%, which is enormous. It's projected to be 9.2. It's actually, these numbers I got wrong. There's a new study that just came out. It's actually projected to be 11.2 billion this year. So I don't even have these numbers right on here. So it's projected to be actually bigger than what it actually is. So I really want you guys to think about that. And then you guys know that the pay for the clinicians, a lot of you that are clinicians in here are working next to other travel medical professionals, and they're probably telling you how much they're making. And you're like, shit, why the hell am I even doing this? Like, these people are making almost 2x of what I'm making. And that's happening all over the US, which is another issue. We won't dive into it too much, but the average pay has gone up. We're seeing that now. But again, this is the graph here is just showing you the market size in billions over the last, it's about almost 15 years, I think, that it goes back. And you know, the contracts are about 13 weeks for medical professionals coming in. So what does this actually spell out for us? There's a huge demand, right? There's a huge demand for institutions to hire travel medical professionals because there's not enough clinicians to deal with it. So I want you guys to think about this. The travel nursing provided a lucrative career choice for plenty of opportunities for job security like never before. The current trends in nursing are similar to the housing market. The pandemic created a seller's market, right? And the buyers need to kind of move quickly on top talent. That's exactly what happened with the healthcare industry, is that a lot of those people that are, have specific, qualifications in the ER or whatnot, they were being sought after, paid a lot more than they typically were being paid. And actually, a lot of hospitals right now are competing with travel agencies for who's coming in and working in the hospital. So I really want you guys to think about that. And I kind of wanted to reference the housing market because, you know, people are bidding on properties right away. It's the same kind of situation that you're seeing in the travel industry. For those of you who don't know, I have a YouTube channel where I talk about travel medical professionals and how to analyze markets and all that stuff. So I'm going to just kind of give you a quick insight on this real quick. If you're looking at getting into the travel nursing market, things that you should know, and if you're not working in the healthcare industry, you probably will need to know that you'll want to know this. There's the level 1, 2, 3, 4, 5 in hospitals. Each one of those hospitals, depending on the level, if you have a level 1 or a level 2, you have way more opportunity because there's a lot more people coming into those markets, a lot more travel medical professionals. Not saying that a level 3, level 4, level 5, and maybe Alex, I can even have you break down the levels of the hospitals even further. So basically, level 1 and level 2 are really trauma intense, that people are able to, you have on-call clinicians, physicians, they're able to handle higher trauma situations. And as you go higher in the numbers, you have fewer and fewer of those opportunities to do that. I think once you get to a 3 or 4, you have to be stabilized in those markets and sent to a 1 or 2, depending on the issues, the comorbidities you have and whatnot. So if you're going to invest in the travel nursing market, number 1, find out how many hospitals are on your market. Number 2, find out how many beds there are. And number 3, find out, you know, how many clinicians are coming into those markets. And how do you find that stuff out? Furnished Finder. If you guys are not on Furnished Finder already, you need to get on there. It costs $99 a year. And actually coming up, I'm actually on a podcast that I host too. And hopefully Alex will have all my information on here. This week, we actually have the founder, Brian Payne, is going to be on my podcast. And we're actually talking to him directly on what Furnished Finder is, where it's going, how clinicians are traveling, what those markets look like. So jump into that, which I'll have a little bit more information. But anyway, on Furnished Finder,
Jesse,
you can actually, yeah.
sorry to interrupt. I had a question. I was curious because I've obviously done a ton of research on the market data that Furnished Finder presents. I was curious if there's like a good ratio that you find is a good area, because like I have a house hack in Denver that I just moved out of, and I'm looking to invest somewhere in Cali, and I'm just trying to figure out like a good ratio in terms of, obviously, because they provide the number of like searches per year or something. Do you have like a good idea on that of what's a good area, if that makes sense?
Yeah, so I'll kind of dive in that in a sec, a little bit further on when I go through that. So yeah, I'll touch base on
Sweet,
that.
thank you.
Yeah, no problem. So Furnished Finder is going to give you, I don't know who that was, but that was a good question. Yeah, so you're going to see, there's going to be, and I'm going to have numbers that are going to come through. I don't know if it's the next couple of slides, but anyway, I'll break down what that looks like. But Furnished Finder is a great way to get nurses to, you can actually see how many nurses are looking for a property. They're looking to stay in your place. It'll break down the numbers directly. But even better than that is that you can find out who those nurses are and what agencies they're working with. I personally get travel medical contracts because of those of you that are on here that deal with travel medical professionals, if you have a place that's $2,000, they might say to you, and I would do the same exact thing, hey, Alex, I'm going to give you, or hey, Savannah, I'll give you $1,500. I'm only going to be there, you know, only during the day, and that's it. I'm not going to really mess your place up. And if you are sitting there with your property vacant for 15 days, you might just be like, shit, okay, I'm going to go ahead and let you stay in my place and lose profits every month. But the way I work it is I actually go to I get contracts with these actual agencies so that I know X amount of money that I'm going to get per month, regardless of who's coming. That's what I'm going to get no matter what. And I have a solid, sustainable relationship. Remember, we talked about relationships being the new currency. That's exactly what I'm doing. So I'm leveraging those corporate opportunities and actually creating a sustainable relationship where I'm able to help the employees. I'm helping the staff, and I'm helping the recruiters find a property. And then pricing strategy is important. It's going to show you that on Furnished Finder too, what the average property is. But you also want to look at, you don't want to discredit yourself. So if you look on Airbnb or Furnished Finder, or excuse me, AirDNA, and it's showing that your property can earn $3,000 a month for a 2-bedroom, 1-bath, you're going to want to get that exact same amount of money for, you know, a travel medical professional. Give or take a couple $100 here and there. You're going to have less wear and tear on your property when it comes to turnovers, all that stuff. But don't minimize yourself. Don't cut yourself short. There's a lot of opportunity right now, and that's why I was talking to you guys about even connecting with corporate agencies. So here's the thing that we were talking about earlier. So I really want you guys to realize this. I live in a little ass town in Houston. It's called Houston, California. There's 7,000 people here, but I'm also next to Modesto, which has about 220,000 people. Turlock has another 70,000 people. Stockton, another 100,000 people. In the last 12 months, there's been almost 30,000 people that have looked for housing requests just in my market. And this is what I want you, the guy that asked the question earlier, how do I determine a market? 123 rentals, total rentals, not even homes. Now here's the big one. Look at the whole house is 39, rooms 82. Map of property listing page views in the last 12 months. Almost 100,000 people looked for a property in a small little market that I'm in. And again, there's little bigger cities that are around me. So that's what I look at. 123 entire rentals, 39 whole homes, and 26. If that's not a supply and demand issue, I don't know what the hell to say. That is 100% what I look for. If you look in LA, San Francisco, you're gonna have higher numbers, but you're also gonna see that there's still a real opportunity in those markets. But even in small cities, if you're looking to invest in, Alabama somewhere, or in, Cleveland, or some of these other Kansas, some of these other markets, these are things you want to look at because a lot of people haven't necessarily tapped into this yet. And if you really are the first ones to do it, then fantastic. Here's another big point that I want to make. If you look right underneath the amount of people that came, Aya Healthcare, Amen, FlexCare, and TrueStaff. Those are 4 national agencies. Those are where a bunch of these travel medical professionals are coming from right now. Furnished Finder is providing that data. And in the podcast, if you guys listen to it, not Brian Chesky. I didn't mean with Airbnb. I met with the Furnished Finder CEO. So he actually broke down these are the large scale agencies that are deploying and assigning a ton of these clinicians to their markets. And then the average hold price, this is, if you look at the 1,500 price point here, that's what the average property is going for in my market. And that doesn't mean that you have to confine with those rules. I'm just giving you, it's just giving you the basic numbers of what most people are booking. So literally everything you need to know is in these 4 boxes right now when you're looking into a market. There's a supply and demand issue clearly if you look at this by the amount of searches and the amount of whole homes. So really think about that. So this is just kind of a breakdown of my market of what's happening. So the average price in my market is about $411,000, 4% Airbnb, cash on cash return rate, which is not great. There's 41 Airbnbs that are in my market, which is, that's not too many compared to a lot of other places. But I want to show you something else right here. So if you look at what I do, I have this highlighted right here. My income, this is my income over the last year in a property that I spent $260,000 on. So that's the numbers there. My mortgage payment is $1,300 a month. So I am 77% higher than every other person that's listed in my market. Why is that, you're asking? We talked about it earlier, a hybrid model. So I'll actually have people come and stay at my property for a short amount of time, and then I'll flip them over and have a midterm rental, have a travel medical professional that will stay at my property even longer sometimes. So there's certain properties that I have that are allocated directly to this hybrid model, or which will have them come in and stay for shorter, during the slow season. So if you see the slow season for me is November, December, and January, which I think you could see on your end here. So I'll have these clinicians come in, and then I'll kind of subsidize short-term rentals through the entire month. And again, you guys, we talked about rural markets growing. We saw that in the trends earlier. You don't have to buy a house in the Smokies or Joshua Tree or all these other places where people are flocking to right now. There's a lot of opportunity all over the place. You just got to do the research and really understand the market and really start connecting with the travel medical agencies, with the hospitals that are in the market, and find out who's coming, what agencies they're affiliated with and connected to, and really start thinking about building your business in a sustainable, intelligent way by finding you can actually find these clinicians or these agencies before you even buy a property there, if you want to even do that route. So really, really, I want you guys to really think about that and, gather that information as we're kind of moving forward. So one of the big things that I want to make sure that we hit here, any investor, any smart, intelligent investor is always going to remember these 3 things, right? You're not going to put all your money into Tesla. You're not going to put all your money into Apple. You want to diversify your portfolio. So diversification is the most important. So invest in the Smokies, Joshua Tree, cool. Do all that stuff, but also start thinking about midterm rentals. You want to diversify not just those hot markets now. You want to diversify your portfolio into multiple different markets. You want to have a pie chart that has them pretty close to equal, if not more. And not only that, but think about the short-term rental and midterm hybrid model, connecting those two together where you don't have peaks and you don't have valleys like you do in the stock market, where your income is sustainable through the entire year. And it's going to show you that everything that we do is based off of numbers, right? So we're going to have this information that you saw here. This is all from Mashvisor. And Mashvisor will provide you information for the last year. It is quite expensive to have and to buy this data, but you could still do it. And it's about $300 or $400 depending on your market per month, by the way. And it will at least show you what the market is doing so that when you're going into these markets, you can figure out, okay, I know that I'm seeing the tick on these months and I can pivot into the midterm rental market at that point. And again, our goal as investors is to stay very sustainable and not have peaks and not have valleys, those dips and those highs and those lows, just like we do with the stock market. The hybrid model, you guys heard me talking about that. It's super important to really think about it. You have to really start thinking about those models, especially if you're in a place that is going to allow you to do something like that. We talked about how to look at the data on that end. Multi-segment marketing, STR traditional guests, tourists, business travelers, versus mid, long-term guests, the seasonality, those workers. We talked about the infrastructure bill happening. There's a lot of people that are traveling that are working differently than they've ever worked before. We're seeing a shift in what the pandemic has brought to us. If you want to look at the negatives or the positive, there's a lot of opportunity in both of those, especially as we're kind of coming out of that post-pandemic, mindset or the travel lodging industry. So again, the key takeaways in this, why is it a great investment option? Midterm rental is an emerging market. We all know that now. That's what we're doing. We're sitting here talking about this, that a lot of these coaches are pitching, get into the midterm rentals. They're actually telling people that are arbitraging units to go in and talk about travel nursing professionals, but actually not actually hosting travel nursing professionals. So really, if you're going to talk the talk, be ethical in what you're doing, really start to learn about these things. If you're going that route and you're going to be arbitraging units, it's not too late to get in the game. You guys saw how I was talking about earlier, how I still feel like we're in the second or third inning when it comes to short-term rentals. And if we're looking at the midterm market, we're just barely starting. We're just barely getting into that. Diversification is super important. Run your numbers and make strategic moves. Invest intelligently. And the biggest thing of all this connection and talk that we're having right now, institutions are coming. We're seeing it happening right now every single day. There's huge opportunities for those that don't understand what institutional buyers seek. And I'm telling you guys, if you guys know anybody in the stock end that works on the hedge funds or works in these markets, institutional buyers look at things way different than we do. It's really hard to wrap our minds around it. But what they're doing, when you start seeing them take chunks out of these things before everybody comes into it, that's where the opportunity lies. And I really want you guys to sit there, ponder this, think about it, and really, think about what your next moves are going to be. So yeah, that's it for me. And I appreciate you guys. This is all my information here. So if you guys want to snapshot this real quick and take this information down, I appreciate you guys, Alex and Savannah, for allowing me to speak in this fantastic room. And I appreciate you guys, and I'm here to answer any questions if there's anybody that has any.
Dude, Jesse, you just killed it, man, with all the data. I'm sitting here
So
like
good.
nodding my head the entire time because it's exactly what I keep telling everyone. I think you're ahead of the curve. And it's funny because everyone that's trying to invest in the Smokies feel like they're behind the curve, like they feel like they missed out. I still think they're going to make a little bit of money,
Right?
But they're behind the curve, man. You know what I mean? They're probably a year or two behind. And it's crazy because like you're under $300,000 single family home. I'm looking at it and you're generating on average about $5,000 a month, you would say?
A little bit more than that, yeah.
A little more than that, right? So let's say
Yeah.
worst case scenario, 5,000, and your mortgage payment, like you said, is 1,300, maybe all in $2,000 or something like that. So
Yeah, right around 17, yeah.
17. So you're generating like $3,000 profit off a $300,000 home when all of us are going in the Smokies spending $800,000-$900,000 that are probably going to see that much profit,
Yeah.
And not only that, you're not working as hard. Like these short-term rentals get beat to shit.
No, they
you have so much turnover. So I think I love this space. I love this space, love it, and I'm trying to pivot right into it. Have my short-term rentals, buy my midterm rentals. I love it.
Yeah, and you got to diversify, Alex. Like really, like that's the entire point of what we do as investors. Like especially if you're new getting in, you start thinking this way. I used to think about long-term investing, and then I thought about short-term renting, and then I thought about midterm rent. it's evolving and changing. So like we have to really see these signs that are happening. We have to see the pandemic, how things shifted and changed. And we know that the prices of homes are going up, but also inflation, we're charging more. We saw in the numbers, 11% higher than we were last year. So that's going to continue to go up. Like this is not going to go anywhere, right? So I really hope that everybody starts to understand and see this. And there's an abundance. There's enough. There's not enough properties in general. We saw the numbers again earlier. So now it's go out and find a market that's going to work, that's going to benefit you, that's going to be able to help you build sustainable income and build a profitable business. Sorry, Savannah, I think I cut you off.
Oh, no, you're good. I was just thinking about this, and I love that you shared all the stats. I love that so much because it just goes to show that investors, like, you have to do your research. Like there's key metrics that you're looking for, you study them, and then that's how you're making your decisions. But I'm just like laughing because at the beginning of 2020, when I first started investing in, I was binging everything Brandon Turner, right? Like he was my guru, everything he said, and all his YouTube videos, and they're still out there. He talked about going out and buying a single family home. And if you were clearing a couple $100 a month, you were cool. Like you could build a snowball empire of real estate, like a couple $100 a month, like you were cool. And this is wild that you're making $5,000 a month on one property. So I think it just goes to show, like, if you guys, I know there's a lot of newbies in the group, or like people who are analysis paralysis. I know a lot of people get stuck on where to go, what market, what to do. I talk to people all the time about this. Like, if you invest in one of these, like worst case scenario, you turn it into a midterm rental or even a long-term rental, like, it has a bulletproof, like, opportunity in it in a way. Like, I mean, you can eliminate so much risk by kind of playing out like worst case scenarios in these. And like, it seems like worst case scenario, clearing a couple $100, you're golden. So yeah, it's just blowing my mind, because if I would have this stuff when I first started investing in real estate, it probably would have been a whole different route. But I love it. Thank you for sharing. So much good stuff in this. I know there's a couple questions in the chat, and then Lenny, the boss, go ahead and take yourself off mute and you can ask a question.
Awesome. Thank you, Savannah. Appreciate it. Jesse, man, this was some awesome information. Thank you for sharing. Hey, how are you connecting with, I think you mentioned you're connecting like with some agencies or something like that, rather than just relying on the Furnished Finder. Like how are you connecting with those agencies and locking down these, I think you mentioned that you call them contracts.
Yeah, so I reach out to the hospitals. So the luxury of where I was at before is that I was actually on the hospital floors every day. I was connecting with the clinicians that were on the floors. So I literally just went to the HR department, knocked on the door there, went inside and said, hey, I have properties that I own, that I want to host your travel medical professionals. I know that, Misty on mid-telly is staying at Motel 6, and Hannah over on oncology is staying at the Travel Lodge. How do I get connected with these people, or how do I connect with you guys to have them stay in a safe environment that's going to have blackout curtains? And I can even go a little bit deeper what I did with these with these agencies, and how I actually curated something specific to those agencies. So long story short, back in 2015, I started thinking about things differently. I'd have clinicians that were staying with me. I would connect with the hospitals, I would find out what agencies are coming from. I started talking to the recruiters that they were working with. So the recruiters and the travelers, they're connected like this. They talk to each other. So those of you who don't know, recruiters actually get paid a percentage of however much that assignment is for. So say I have a 6-month or a 13-week assignment, I'm supposed to make, I'm gonna just give you guys a hypothetical number, $50,000. If I'm a recruiter, I'm gonna make, let's just say 12% of that. So I want to place that person just as much as that recruiter or that nurse wants to go stay somewhere. So I started forward thinking. I was like, cool, what if I get them a car when they show up? What if we have because I already had a short-term rental at the time. What if I have my cleaning crew go out and pick up groceries and deliver them into the house before the nurse shows up or the doctor that's staying, so they don't have to go and do anything? This is before Shipt and before Instacart and all that wonderful stuff. So now I can have a travel medical professional, say they only want to pay $4,000, but now if you guys go on Expedia today and you go look at how much it is to rent a Ford Focus, it's over $2,000 just to rent a little small car. So I can rent them a car on Turo that's attached to my property. I'm basically a one-stop shop for these travel medical professionals to come in. And when you tell a recruiter something like that, guess what happens? Their freaking head explode and be like, wow, this guy has a professional, legitimate business. I'm going to give him every single client that I have coming to that area, and I'm going to tell everybody else about him. So that's how I started growing and building my business. Is I thought about, what is it that a clinician needs when they get here? How can I make their lives easier? How can I make the recruiters' lives easier? How can I make those agencies' lives easier? And how can I save that agency money? And those were the three things that I thought about, and those are the three things that I implemented. So to answer your story, Lenny, just call the hospital and find out what agencies they're working with. Sorry, I had to throw that
So
other
is
stuff
the
in there.
agency paying you or the traveling nurse?
Agencies. I don't want to deal with the travel. I don't want the nurse's money. I want the agency's money, because this is exactly why the government is trying to cap. They're not trying to cap the nurses' wages. They're trying to cap what these agencies are doing. The agencies are price gouging. So say I'm a nurse and I make $55 an hour. Those agencies are actually charging the hospitals like 4x what they would typically make. Give that nurse, let's just say $150 an hour, and then they're keeping the rest of it. So I want the agencies to pay for it, because I know that I'm going to get X amount of money no matter what, every single time. And that's why it's important for me to go after the agencies and not the clinicians. The clinicians, if you and I both got a stipend of $5K a month and there's a place for $2,000, we're going to say, hey man, I want to pay less, right? That's just what's going to happen. So I don't want to be the middle guy on that end. I'd rather deal with the corporate sector and deal with the clinicians, or deal with the professionals on that end.
Yeah, thanks, Jesse. You're the man. Appreciate it.
When you're going directly to the agencies, is there like a lot of the friction that I've had is trying to figure out whether the agencies, like how they're putting together multiple people in one property? Because obviously they can, like, you can go the Furnished Finder route and go like individual rooms or something of that nature. But I think the confusing part on my end that I've had for the past like month or few weeks is like, how are these agencies grouping together multiple people? And then like, where does that come from, in a sense, I guess?
What do you mean by grouping multiple people together?
Like, so in terms of the route where you're saying go directly to the agency, are you going at it in terms of like getting the agency to put one person in one bedroom and then another person in another bedroom, or like rent out the entire property?
I would never rent one bedroom out. And the reason being is because every single room is going to be just like owning its own property. You're going to have the same headaches that you would if you had an entire house. Plus you want to, we're talking about intelligently investing. You have 3 rooms in a house. That's basically like essentially having 3 properties. That's 3 times the work that you would ever need to do. So get that out of your head. Like, don't even think about renting individual rooms. You're going to make more money with an entire house. And when I talk about getting a house, you guys, like, this is the living room right here in this picture, a living room of a house that I have that's rented to travel medical professionals. Like, you don't want to have just like 4 rooms and a wall and a TV. Those days for Airbnb and doing well with short-term rentals are gone. It's over. We talked about professional networking and people getting better at what they're doing. You got to buy something that is going to be able to have, that's unique, that adds opportunity. And I'm not saying go out and buy these like extravagant $1 million homes, but buy a house that's maybe a mid-century house that's been sitting on the market for a while, or something that has quirkiness to it that you can pivot between the short-term model and the mid-term model. People that are staying places want to stay somewhere, especially now, especially with millennials. And by the way, for those of you that work on hospital floors, that travel medical professionals are traveling in groups now, and I'm seeing this. So there's 2 or 3 or 4 nurses that are traveling together and they want to stay in the same place. If I have a pretty decent house that say I can make $6,000 a month on Airbnb, guess what? I'm able to make $5,500 with those travel medical professionals, because they each get a $5,000 stipend and they're only paying, $1,500. Even if I went on Furnished Finder. So you're creating a niche out of a niche. There's a lot of millennials that are traveling like that right now. And there's a lot of clinicians that are traveling in groups. That's what they do. And you guys all that work on these floors know that they'll work their asses off for 3 months and then go to Cabo for, 3 weeks and then come back and do the same grind all over again. It's kind of that nature of how these clinicians work. And not all of them, I'm just giving you a hypothetical, but yeah, you got to have a place that has some resonance, that's designed well, that's somewhere that you'd want to stay, that's going to photograph well on pictures, and that, when you're connecting with recruiters, gives some type of, gives you an opportunity, or gives them, basically a little vacation to whenever they're staying somewhere.
Jesse, a few other questions. I don't know who had their hand up first. Was it Brittany or Francisco?
Yeah, let's go with Brittany.
Okay, Brittany.
All right, can you guys hear me?
Yep.
Yeah.
All right, great. So I'll make this short. I have a house hack I'm moving out of. It's a pretty spacious 2-bedroom, and like we have a large kitchen you can eat in. But I have a formal dining room. I'm kind of on, I'm trying to figure out like, would I optimize would I get the best result if I turn that into a 3rd bedroom? Or does the medium-term rental really successful still with the 2 bedrooms? Because there's just a lot of extra space. I don't know if a formal dining room is really necessary, the best use of that space.
So I can always tell you now that the more rooms you're going to have, the better. There's what's called RevPAR, and it's basically a rate per room. So if you have 2 bedrooms, let's just say your market is going to give you $50 a room or $55 a room, you know that your amount is going to be, $110 a month or $110 per night. If you have a 3-bedroom house or 3-bedroom potential and it's $50 a night, that gives you the potential of know that your revenue based on individual rooms is going to be $150 a night. So, and again, this is just how it works. So I really want you to think about the more rooms you have, the better. But people always tell me like, I'm going to invest in a single family or a studio or a 1-bedroom. That's cool. But if you want to make more money, you're going to want to get at least a minimum of 2-bedroom, especially if you're in a market that you're able to pivot into a short-term market during, like I was mentioning earlier, like a hybrid model that you can pivot into short-term because you can sleep more people, which will then give you more opportunity to have more people in there. Again, everything is going back on that RevPAR model, and that RevPAR model is what hotels use. They use it as a room per night occupancy fee. Like, they know that 1 room is going to equal out to X amount of money. Same model is applying to short-term rentals. You get 1 room that sleeps 2 people, that's going to give you a dollar amount. Add another room and another room, it's going to give you another dollar amount. So you want to think about that.
Okay, sure. Thank you.
I think Jagadish had his hand up.
Jag, what's up, man?
You there?
Hi, can you hear me okay? Sorry.
It's kind of hard to hear you.
Can't hear you. Yeah.
You there?
Yeah, yes, I'm here. Can you hear me now? Okay.
There you go.
Sorry.
Yeah.
All right,
Awesome.
jump in.
I have a quick question. Thanks, Jesse. I think last 5 minutes is worth my, sorry, I was just able to join just past 5-10 minutes, but I have a quick question. So I'm currently arbitraging a unit for short-term rental. So do you recommend arbitraging for travel nurses too? What do you think about that instead of buying it instead?
Yeah, I think right now there's a huge problem going on with arbitrage where a lot of these coaches are teaching people to talk about travel medical professionals, and they're not actually hosting travel medical professionals. They're hosting short-term rentals, which is like the most unethical thing you could do. And if you know anybody that's built a business out of arbitrage, they've always built it with people that a lot of people that own properties don't own just one, they own multiple properties. So you got to really think about it. If you're really going to arbitrage, or you're saying you're going to arbitrage the clinicians, then you should probably do that. So I personally have arbitrage units and I house medical professionals in them. I have one of them that I do a hybrid model on, but the other ones are specific to travel medical professionals because I told the landlords that that's what I was going to do. And I'm ethical in those things. And if you're ethical and you're following through on your word, you're going to be able to build a business and build trust, which is the most important thing that you want to have when you're dealing with landlords, especially if they're independent small mom and pop landlords, because they're going to feed you more properties later on. So really think about that. For those of everybody listening right now or learning that, if you're going to talk about hosting travel medical professionals, please do so, because it can come back and really bite you.
Got it. One more question. Can I access this recording sometime later, or is it just once?
You have to ask Alex.
Yeah, it'll be on my YouTube channel. I dropped the link in the chat. I'll put it again right now.
All right.
Yeah,
Thank you so much.
Savannah will sell it to you, buddy. Just reach out to her. 50
No.
bucks, you can have it.
Thank you.
On the Net Worth Nurse YouTube, it'll be on there. Well, let's
Charge 'em.
about maybe two more questions, you guys. It's already 7, and I want to be really respectful of Jesse's time, but I know you guys are here ready to ask questions, so we'll just do a couple more. Francisco, you can go ahead and take yourself off mute and ask.
Hey, how's it going, Savannah? How's it going, Jesse?
Hey, Francisco.
Hey, I think we talked about on IG in like about a couple weeks ago. I just had a quick question. Good stuff,
sir.
by the way, really good stuff. I already have two short-term rentals. My question is how you answered one of them. I was thinking of buying a house and renting out each room individually. You said and I did the math. My goal was, hopefully by next year's five short-term rentals. But then I did it's going to be a headache, right?
Mm-hmm.
A lot of rooms. So now I want to make sure that this is the correct market I'm buying. I've heard a lot of things, good, bad things. It's Cleveland, Ohio. Can you Can you tell me how to research that market and see if it's good?
Yep. So pick an address and go on Furnished Finder and just start looking at the how many clinicians are looking for properties in that market. Look at how many hospitals are near that area. We just talked about the level 1, level 2, level 3 hospitals. I even go deeper than that. I look on Monster and Indeed jobs and see what hospitals are hiring. It'll actually show you on there what travel agencies are hiring for people in those specific spots too. So I break up my data even down even deeper than what we're talking about here. But for the sakes of this call, and this time, that's what I would do, is just really break it down in those simple things. Is just you know, how many hospitals, what agencies they're working with. Call the hospital and find out, or it'll show you that information on Furnished Finder for free. Yeah, I mean, just look at how many. You can also look at. I also look at how many how many colleges are in that market, and how many RN programs that they have, and how many average students graduate each year from those markets. And that's all public data. You can find that out online.
Got it, man. Got it. Well, that was it. You answered the other question.
Cool.
Hey, let's get
Thank you.
Deidre in here. And by the way, I've invested in Cleveland, and that place sucks. So, and I'm a Browns fan. So, but I don't know. Maybe I'll work with the traveling professional, but I wasn't successful. Anyway, Deidre, let's get you on here. Last question, because we're running over time.
Okay, I'll try to make it quick. First of all, thanks for the information. I think I've been on Jesse's Instagram page and looked at all his posts like a couple times, even down to the feature wall. I think I'm going to steal that idea from my potential property. But I did have a question about the structure, because I am a potential host, and I think I'm kind of like teetering on the edge of analysis paralysis. So can you tell me, what do you recommend as far as like business structure? Should I go with LLC, S Corp, C Corp? I want to make sure, you know, I don't have any tussling with the IRS.
Yeah, everything that I do is I've always done as an LLC. My business that I have personally, I have under an S Corp. So it really just depends. I don't think there's a right or wrong way to do things, but I personally would probably go with an LLC. I'm not a tax strategist. I'm just giving you my 2 cents on that, but definitely consult with somebody on your end. But me personally, I have LLCs, and I W-2 myself, so I have an S Corp for that.
Thank you.
Hey, let's go ahead and wrap it up. It's crazy because I'm like really giddy whenever like Jesse's talking about this stuff, because I think he's in like this super niche thing, and I think he's ahead of the curve. And I think we have to view things different. We have to do things different. The old ways aren't going to work anymore. Like investing in like long-term rentals, and like Savannah said, get $100-$200 a month. That just doesn't work. We're in the sharing economy now. And one thing Jesse, I don't know if he talked about, but he rents him a car too, right? Not only the house, like he'll make an extra like $500 or $1,000 a month just on the car. It's
$1,000, yeah.
It's so funny. It's crazy, right?
For a 2014 Honda Civic, buddy.
So he makes like $4,000 on the rental, and he rents him a car. It's crazy, man. So like I said, the old ways don't work anymore. There's new ways of doing things. But Jesse, how can people get a hold of you? And you have a course that teaches this stuff, right?
Yeah, I have a course that teaches this. I'm just getting ready to launch it on Thursday. We're opening up the enrollment. I usually sell out in the first day. So you guys can find me on Instagram. I'm going to put it actually in the notes here. I'll give you guys my handle. It's AirVenture Hosting Co. And you guys can find me there. I'm also on Facebook. I have a YouTube channel, but if you guys go to my Instagram, you can just click on my link tree, and there's all kinds of stuff about what I have going on. So yeah, I'm super excited to teach you guys this, because there's a lot of opportunity. And I think, Alex, you said it perfectly. There's a new way to invest, and you got to think about things in a different way. The old school way, Savannah mentioned it, $200. Like, who the hell was going to invest in anything for $200 a month? Like, I don't understand the point of that. There's way more ways to invest intelligently. We know about the corporate agencies, these hedge funds that are buying in. There's opportunity all around us. We're seeing it starting to happen now. It's all right. It's our time to jump in early and capture those markets, and the travel medical world, and the infrastructure bills that just passed. So there's a lot of potential, a lot of opportunity. It's just aligning ourselves intelligently and putting those steps in place. And for Deidre, you got to think smart on this. Don't get stuck on the numbers. You got to just jump in. Make sure the numbers work, but You just got to jump into it. And for everybody listening now, you're going to get stuck on numbers. Yes. But if you have certain specific numbers that you're thinking about, just jump in and do it. You got to learn somehow, some way. And the only way to do that is to dip your toe in, get your feet wet, and figure it out, because that's how everybody does this.
Yep, that's exactly it. Just get started, you guys. So many options out there. I think it seems that you're just filling the needs. So going out there, finding what people need and filling those needs is a huge way to generate business. So thank you so much. Reach out to Jesse to look at his course coming up this weekend. He has a lot of good stuff. He's pioneering this. So check out what he's doing. And thank you everyone for attending. We do this every Monday night at 6 p.m. This will be recorded. It's on our my YouTube and then through our Facebook group, Healthcare Professionals Investing in Real Estate. If you guys know any other healthcare professionals who are interested in real estate, please share this group with them. We love interacting and growing this group. We're sharing a lot of cool information here. So thank you everyone and have a great night.
Thank you guys.
Thanks, guys. Appreciate it.